Nussi, crypto incels, rollbait gamblers, disgruntled bag holders, top of the morning. We're going to look at Dogecoin tonight. This one seems to be top of mind. Looks like everyone's chirping about it because Elon is interviewing Trump tonight. So everyone's expecting an Elon pump. Very possible. So I wanted to get this out the other day, but couldn't be a better time than now. Everyone remembers this? It's the Elon Saturday Night Live top. Everyone was saying this is going to go to $1, and then it just got nuked. So I'd imagine there's a lot of top buyers over here, and they're praying for their bags to recover down from the lows. So I'm going to give you a little hope today. Hopefully this video clears up some areas of interest and how far this can go in a proper bull run. All right, let's get at it. So this is the weekly chart. On the weekly, I usually like to frame the trade starting from there. So you'll notice we're plotting a fixed volume profile from the beginning of the range where this big candle came in, and we started consolidating here before going parabolic. So this is where the range begins to present. You'll notice all the volume is traded down here in this bottom of the range. Also, you'll notice there's a composite or range point of control right here. Funny thing is, we just tapped it right here and reacted beautifully off it. So it literally bottom ticked off that point of control, which is a good sign. You want to see that as dynamic support. So a lot of people are going to look at it as static support. This previous high, inverted, right? So it is, but it's also supported by volume. That's why I like this level, and the reaction was real. Also in the range, you'll notice we had a weekly raid within that bottoming range into a very strong weekly shift. So that displacement was unreal. But it actually faked a lot of people out to the upside, because you'll notice it broke out of the value area, and then it immediately retraced. So this was a false bullish breakout. Now, within this range, I usually look for, after a shift, where is my optimal trade entry? So we usually map it from wherever there was a swing low, which took out a previous liquidity point, and the swing high that took out previous liquidity as well. You'll notice over here, this is your 618 to 786, and inside of it, we have a weekly internal imbalance right there, which got rebalanced here, and then one more raid or flush of the lows with a pretty good reaction off the point of control. So now that we have the weekly, and important to keep in mind, there's still a massive liquidity pool below this, right? So you have this wick, that wick, all this liquidity. So it can easily flush into the equal lows, and there's a massive inefficiency below the value area. So just be mindful of that. If you're going to enter a trade, just have a stop. Otherwise, this can easily reprice from where it is now another 77%. So just keep that in mind. That's the weekly frame. And now we'll jump into the 4-hour. So you guys heard me talk about this before, where I like to map 4-hour structure into the weekly key levels. This is your 4-hour structure, but it's easier to visualize in the 12. 1 second. No calendar. So just to visualize it, we'll look at it in the 12-hour. And you can see your structure pretty clear. So this raid was effectively all this liquidity at the top of the range. So once that got taken out, your sell program was activated with some order pairing up here. So people were willing to short and people's stops got ran. So there was a big volume event there. And you got a displacement below this low, this retracement back into this bearish order block. That was another bit of order pairing or your low risk sell. And then you displaced again below this low, forming a consolidation range, before breaking down again below these lows and then forming a new consolidation range. So here you rebalance the weekly and then you ran the lows again. So again, this is something all these meme coins or highly liquid coins are going to do a lot. And this is pretty much the structure you're looking for within the weekly setup. So that was your 4 hour viewed in the 12-hour time frame. Now if we drop it into the 4 hour, you'll see there's a nice liquidity arc here with a lot of failed swings to target to the upside. So that's usually good. It means at least you have a pretty good draw on liquidity. Here's your 4 hour. So within the 4 hour, in this consolidation range, you had a purge over here. That's your 4 hour raid. Here's your 4 hour shift above this order block that flushed the lows. So this I would consider a 4 hour shift. It's not a massive displacement, but if you run it across using this as your guideline, that's a pretty good displacement. So we'll just mark it in here. So you have a raid, a shift on the 4 hour, and it's all happening inside of your weekly area of interest, which was inside that OTE fib. Now in this range, if you plot your anchored volume right here, so your anchored VWAP, you could see it's the impulse up was pretty strong. It hasn't really retraced into it, but if it did, I would look for a reaction coming off that. What I normally look for is within the time frame I'm trading, I'll map the 4 hour low for the VWAP and look for where the support would be, which is going to be this order block right here. And that low should be a protected low because it cleared out the internal range. So this order block lines up nicely with that VWAP, and below it you have another imbalance here and a 4 hour order block below that. So this could still be the draw, but if you notice a bottoming structure over here with a raid and a shift on low time frame, that could be your entry in this zone. So I would look for that. Here's the long in the range. So this is a conservative long with 1, 2, 3, 4 DCAs and a 17.7% wide stop. So that would assume all these 4 hour areas of interest are going to be the target. And even below the lowest one here, you have a 7.5% stop. So it's pretty wide even at the bottom entry or your bottom DCA. So this, again, on the higher time frame, you're not going to get the tightest entry, but if you just wanted to set it and forget it, that would be a pretty good entry to take. Now we'll look at the 15-minute for where the entry could be. So now that we had a 4 hour shift, we're looking for 15-minute raid and a 15-minute shift. So there's your 15-minute raid. Here's your 15-minute shift above this consolidation that took out the low. And then if you map it into the 2 hour time frame, here's your 2 hour breaker, that last up candle that led to the raid of the lows. And we closed above it here and here with pretty good displacement. So it's even with this like baby closure below that 2 hour breaker, that doesn't worry me. That would actually still be considered valid because it immediately got bought back. So that 15-minute entry is respecting the 2 hour breaker. And then if you plot another VWAP from the 15-minute low, you could see it's respecting that, confirming bullish order flow. So any pullback to the top of the breaker here, I would be looking to start longing. And then here you have a 15-minute order block. The reason it is, again, the same thing. It raided the internal range here, rebalanced over here this little inefficiency, which led to a shift above that high. So So that validates this as your 15-minute order block, and you can see the reactivity off it. So you use the order block plus the VWAP. So it might not come back at this point, just because locally this is very bullish, and it's obviously everyone's shilling it because of Elon, and everyone's, you know, hyper focused on this coin for tonight. But if there is a pullback, I'd be watching, like set your alert on VWAP just to see how it reacts. Anyway, I have an alert there, but yeah, see how that reacts. So this would be your 15-minute entry in the zone. 15-minute order block. So I'd be entering inside of this demand zone right here. I would DCA below this wick because your VWAP will probably flatten out over there as well, so it should be reactive. And then the bottom entry out of the three would be in the lower half of this order block. So basically the top of the order block was used, so you have to assume bids have already been absorbed, and the resting bids would be below this wick. So you just have to assume that if it does come back to the range, there's a strong likelihood it's going to go to the bottom of the order block. In terms of targets, what we're going to target is a very clear range, this liquidity arc. So into this liquidity pool, you're going to have 35% move. Above that, if we pop it back into the 12-hour, we have our 4 or 12-hour MMXM. So your next targets would be this liquidity pool into this daily imbalance. One moment while this thing wakes up. So there's your daily imbalance, which is a really, really strong draw above this liquidity. And then your final target, assuming you bought the bottom over here, is going to be your original consolidation, which you have a ton of liquidity in the range. So that's the full trade setup, and that's multi-time frame, starting with the weekly into the 4-hour, displayed on the 12, into the 15-minute with that 12-hour breaker, 2-hour breaker. So overall, this is a pretty good setup. It could go lower and seek or hunt liquidity down here and down here, or even this internal, but just based on how it took out the weekly external high and it rebalanced and reacted off the weekly imbalance, the next target is going to be your external high. So that's one to watch for. All right, guys, enjoy and happy gains. Cheers.